Welcome to the chat. Stay with me. Swing highs, swing lows. That is how the market moves. Accumulation, manipulation, distribution. That is the template of the market maker. And all these are encoded in the candlestick. So now, as we can see right here in front of us, this is a price chart made up of candlesticks. For beginners, all these are going to look like jargons, but in less than a minute, we are going to clarify all these to explain what they really mean. As you can see, price moving here, creating series of lower highs, higher highs, lower highs, and higher highs with a cluster of green candles. These green candles in this box, they signify buying pressure. Meanwhile, on this other hand, as you can see, price creating lower lows, higher lows, lower lows, higher lows, lower lows with a cluster of white candles. Let us mark them in a white box. These white candles, they signify selling pressure. Meanwhile, a candle that has neither color, that is neither green nor white, like this candle here, it signifies indecision in the market. So now the candlesticks, they give all the information a trader needs to see. All traders will see the same charts, yet we look for different things. Why is the reason for this? The reason being is the fact that various traders employ different strategies, and in my opinion, the best strategy is the strategy that a trader understands best. So for me, I prefer the candlesticks, as we have the bar chart, which also gives us information as to what is going on in the chart. We also have the line chart, which also gives information of what is going on in the market, and we also have the candlestick. But for me, I prefer the candlestick as it gives me enough clear data, just like what the bar chart gives. The candlestick gives me the same, just like what the line chart gives, the candlestick gives me the same. So each trader with his or her own preference. So now, to understand what we are going to learn today clearly, we need to understand price action and the reaction of price. First, let us begin with the engulfing candle. We have two critical patterns that we must know in the market. Here we have a bearish candle where we have the buyers in this green zone and we have the sellers in this white zone. So it means that the buyers here are strong, but what happens? Power shifts to the sellers, and what do you see after? Price drops. The sellers push the market down, and price has continued to drop. So once you understand this, nothing will be alien in the market. You know what to expect. But you can see that before price dropped, what happened? Price is in a critical zone, which is a resistance zone. Support and resistance, these are the peaks of the market. These are the highest points and lowest points in the chart. So you can see the market was in a peak, and this beautiful price action played out and price dropped. So it is all these we are going to be putting together to know the direction of the trend. And we have another price action, which is the morning and evening star. So now let us take a look at the morning star. Here you can see the sellers in this zone, and what happens next? You can see the buyers in this green candle and the buyers in this green candle totally overshadowing the sellers in this white candle. So what does this mean for the market? It means that power has shifted to the buyers, and you can see a similar pattern here as well. You can see the sellers in this zone, and what happens? The buyer take over and the buyers totally overshadow the sellers in this zone. And what does it mean? It means that power has shifted to the buyers. So now, inversely, if it is a sell pattern, we are going to be having it upside down in the inverse manner, and I hope we understand that clearly. So now, as we have seen the bearish engulfing here, we have a bullish engulfing here. As sorry, this is another bearish engulfing. You can see buyers here and sellers totally overshadow them, and price drops. So those are the most critical price actions that we need to understand as traders so as to successfully milk the market. So now let us look at another engulfing pattern. This is not a picture perfect engulfing pattern, but it's an engulfing pattern. You can see sellers in this zone and buyers in this green candle totally embodying it. However, this is not a strategy to either take entries, but just for you to have a perception into the direction of the market, which is always good. It helps see the market with clarity. So back to our point of discussion, we have explained the two important candlesticks patterns that we need to understand. So now, to know the direction of the monthly, we can scale up to the weekly. And what do we see in the weekly? We can see that last year price made a peak and price dropped drastically. So this year, what happened? First, every time you get to the chart, try to look at the price actions that are playing out. So here, what do we see? We can see bearish price actions. And what does it mean? It means that the sellers are strong. We can see another bearish price action here. What does it mean? It means that sellers are strong. So on AUD we can conclude that mostly this year, currently price has been dropping. So what do we do next? We go to the daily. So to know the direction for the month, the daily is the best. And as we have said earlier, support and resistance, these are the peak of the market. So now what do we do? Let us mark the peak of this month and the peak of this month. So we look at reaction of price in this peak. So now, to know the direction of the market clearly, what do we wait? We must always wait for price to break the peak. And once price breaks the peak, we do not wait for the peak to hold, because if the peak holds, like for instance here, you can see the peak held before it dropped. While the peak is holding, we should expect the market to be in a consolidation, as the market has not given a clear direction. However, we can scale down to the weekly to have a clearer direction. But right here on the monthly, what happens when price breaks this peak? Let us see. Price breaks this peak, and we can see it breaks. We have a close of a candle here, we have a close of a candle here, and a close of a candle here. So once price breaks the peak and we have a close of more than two candles, as you can see, the peak in this low here, this is the support, as this is where we have the majority of strongest buyers for this month. So now, as price has broken it with more than the three close, it means that now presently the sellers are strong and the buyers are weak. So now we have the dominant sellers for the month of April, since we have had more than was one two close. However, for us to have a stronger confirmation, we need to have a bearish price action, and we can see none here. We can see none here. For instance, let us look at this month. You can see for this month what happens. Price breaks with, we have a close here, we have a close here, we have a close here, and price came back onto this zone. And when price left this zone, we can see this bearish price action here. And seeing this bearish price action, then we expect price to drop, and you can see price really did drop. So after price breaks the peak, you must wait for more confirmation, wait for a bearish price action for a sell trend, or a bullish price action for a buy trend. Let us take more examples to confirm what we mean. However, you can see here we have one close, two close, and what happens? A bearish price action and price drops. So that is best. But you can see when price broke this particular resistance, that is the high, you can see we have a close here, but no bullish price action. So you make no action, no bullish price action outside this range. So I hope we are following accordingly and attentively. So outside of the range, you should always expect a price action, and always make sure that price breaks it with one or two close. So now let us scale down to the 4 hours to have a clearer view, because the 4 hour will give you a picture perfect view of what exactly is popping in the market, what exactly is happening in the market. So now we come into the 4 hours. What happens? The same rules apply. It's not complicated at all. You don't have to. Forex trading is very easy. It all depends on how you understand the chart. So right here, what do we have? We can see this low here. We mark it. We also mark the high in a beautiful manner. Now we have marked the high and the low. And what happened? Price broke out to the low. We have one close here, two close, two, three close, and what do you expect? You can see a bearish price action and price dropped. So seeing the bearish price action, we can conclude that yes, price is going to go up or down. So you just have to be patient. Don't force the chart, just wait for price to play out what you want to play. So the essence of all this is just to know the direction. Here you can see price broke is you have a bearish price action here, and you can see the price continue to drop. And we need to understand something about the market. New week, new targets, new day, new targets. So just because you have confirmed the trend last week or last month, it doesn't mean that you should come with the same bias into the fresh month, because the market always has new week, new targets. That's why the market is an ever-changing environment. Where there's change, there's opportunity. Where there's chaos, there's opportunity. So you can see price broke with one close, two close, three close, and we have this beautiful price action here. So after the price action, you can see what happened. You can see what happened after the price action. Price retested and dropped. So just to confirm the trend is easy. Don't complicate anything for yourself. So even if price breaks with more than two close, you must always wait to confirm a price action above the range. It is that simple. So once there is no price action that confirms the direction, you need to be wary. You need to be what? You need to be wary. You need to be suspicious. So you can see this broke it one close, two close, three close, but no price action to the upside. So you can see. So let's look at this and this. Most likely there's a price action to the upside. So you can see at this peak price broke, and when price broke, we have one close, two close, three close, and we have this beautiful price action here. And what happens after the price action? You can see price retested and price went up. So you don't have to you don't have to be you don't have to be trading is not rocket science. You just follow the basic principles to the book. And here we have a close, we have second close. Here we can see a bearish price action. You can see a bearish price action confirming the trend further, and you can see that price drops. So that's just it. You must always wait for the price action to concur with the supposed direction, because what that price action means is that the sellers are they are confirming the trend further, or the buyers are confirming the trend further. Because as I always say, in the forex market, you don't know where the majority of money is. We don't have a central exchange, but with price action, with candlesticks, we will have a perspective, a bias that this is where the sellers are strong, this is where the sellers are weak, this is where the buyers are strong, this is where the buyers are weak. But to know all this, all you need to do is just to follow the basic principles of the market. So as I have said earlier, we already saw from last year that price is in a strong sell trend. That is why most of these areas we are marking, that's why you can see price dropping. That is because of what has already occurred on the monthly. So you can see one close, two close, three close, and this price action here, and price dropped further down. So that's just the simple way to know the direction of the market. So most of the safest trade the trader will be taking, if he takes it with these buyers, I can bet you that you can see right when price broke through, we have this price action, and you can see how price reacted. So it is that easy to know, it is that easy to confirm. And there are also other price actions that, or some people call them other block price action, whatever you want to call them, as long as you know what you are doing. Here we can see the buyers playing out the price action here. So we are just having as many examples as possible so as to know how to confirm these things. So now this is a different pair. As we know, let's go to the weekly. And what do we see? The first week of this month, we can see bearish patterns. So USD this week, we can this year rather, we can have a perspective that probably the US dollar will be weak against the Swiss franc. Just seeing this bearish pattern. So we go to the daily. When we go to the daily, we just apply the simple principles we have learnt before. So we mark the highs and lows, and we wait for reaction of price in those highs and lows. So you can see as price broke this, we have one close, two close, three close, and just exactly in this close you can see this bearish price action that we have thought before playing out. We mark it, you can see price dropped for this previous month as well. We mark the low. Just as we mark the low, you can see price broke 1 2 3, this bearish price action, you can see price dropped. So it is not difficult at all. Just be religious with your technical analysis, be disciplined with it, and don't break your rules. So actually there's a way where we can confirm the trends. So looking at this for the week, you just confirm the direction for the days. So there's a way we confirm the trend for the sessions. We are going to do a separate lesson on that. So here, what do you see? You can see this bearish price action. Even though it was broken, price still continued going in the down direction. So it is that simple. You can see just as price broke, price created the fair value gap and continued to drop critically. So you can see as price broke, price played out the price action here. Even though price came back into this range, it still continued to drop because this price action has already confirmed the strength of the sellers. So no need to complicate things further. And you can see now it seems like the order flow is changing to the upside, because right here you can see as price broke this zone, you can see a bullish engulfing pattern playing out here, and we expect the US dollar CHF to be in a range which we are seeing, because now it seems that the order flow is switching to the other side. So let us take more examples. You can see on Euro USD, what do we see? We see patterns that confirm an uptrend. You see patterns confirming an uptrend. So we just go to the for daily. You can see we mark the critical support and resistance zones, one close, two close. You can see bearish candle confirming it. And recently this month, what do we see? And see price broke this resistance, created one close, two close, three close. You can see this bullish price action playing out here. You can see this bullish price action playing out here. What happens? Price follows, and this zone as well. Let's look at what happens. You can see one close, two close, three close. You can see price action here, a bullish price action this particular day. So the other months we'll be looking out for what to expect. So now we'll go to the lower time frame and look out for more beautiful things to happen. You can see as price broke through, this price action played out, so we can confirm it's an uptrend. You can see price broke the resistance. We have this price action playing out on top. So even though price came in a range, price still tries its best to push further. And as we know, as I always say, nothing is cast in stone in the market. So just because you have learned this, it doesn't mean that it is cast in stone. You still need to be flexible, as we all know that in the market anything can happen. So plan your trade your plan, and most importantly manage your risk and emotions. Have a peaceful year ahead. If you find this useful, like, share, follow and subscribe for more.